Well, hello everyone. This is Casey with Hill Financial Group, and this is Money Matters, podcast number 30 something. We're probably coming in on 40 here pretty quick, I bet. Today's podcast, thank you all for listening. Please subscribe, share it with friends, family, people that might be interested in knowing a little bit more about Mike and I and the Hill Financial Group team. The topic of discussion today is going to be planning for parenthood, financial tips for new parents. So I've just had a new client come in on Friday who have a 1-year-old. And so, yeah, bright young couple, doing well, got great jobs, but they're trying to set their family up for success and long-term planning around that. So they didn't want to get too far down the road without, making sure that their new son was just planned for and what the future might hold for him. So yeah, that's kind of the things that we're going to be talking about today is what to look at and what to budget for and all the fun things that come with parenthood. So the big picture is just having a mind shift from, it's just about us and, being the family with 2 incomes, no kids, and yeah, but now you've got a kid on the way or a kid here, and there's new things that need to be budgeted for. I would say the biggest thing is just make sure that emergency fund is fully funded to the best of your ability, getting at least that $1,000 emergency fund, and then work on that 3 to 6 months of savings of expenses for your family. Those are certainly going to help you, alleviate any, stresses from a money and saving standpoint, to have that in your bank account. And childcare costs and just kind of looking at what, are we going to do daycare? Are we going to have a nanny? Are we going to go to a one parent, income household? And mom's going to stay at home. What does that look like? So just kind of figuring out what those income and expense changes that could happen and planning for those, getting an idea of what, diapers and all the, new clothes, food, all those expenses change once a new baby's here. So those are things to just kind of take into account and look at. I would say, generally speaking, you probably need to be budgeting, $2 to, on the high end, maybe $500 more a month for a kid. And that's going to kind of, change, how much you're maybe going out to eat. We're doing a lot more meals at home, especially in the first 6 months or so of that kid's life. So just thinking through some of those things. Some other risk management things to think about is now it's just not you and your wife, but with a kid, maybe life insurance is something you haven't really taken account of and taken care of from a financial planning standpoint, and just making sure that your family's protected against the unforeseen and unknown event that could occur for you. And so, just making sure that's squared away and talk through with you and your spouse. Maybe y'all both need to address that life insurance need there. And so those are things that we talk through with our, young families all the time, and just seeing what they have through work versus what do they have outside of work, how much they would need and what they would want to see happen in the event that something happened to one of them. These are just questions that we ask to get an idea of, wanting to make sure that, their family's taken care of and provided for, kind of given that worst case scenario of something happening. So, health insurance and making sure the kid is added within 30 days of birth or adoption, disability income protection. So if y'all both are going to be working or just one of you is working, having long-term disability disability that's outside of your employer's plan, that can kind of give some peace of mind. Those are things that we can discuss and look at to see if that is needed. Talking through, estates, wills. Definitely, one of the things that came up in the client meeting this past week was that they wanted to go make sure they got a will done now that they have a kid, and so just referring them to a good estate planning attorney here locally in Midlothian. We have a few that we recommend, and so getting that in place and kind of talk through and what is important to both of y'all. If something were to happen, those are great conversations to begin having. Not fun conversations, but important ones. So yeah, definitely that. As far as like long-term savings goals for your kids, I would say definitely start early. You can be as small as $50 a month, but like a 529 plan for college savings. These are great, accounts to have. And what's the really good thing now that's come through some of the new legislation around these types of accounts is if the kid goes off to college, either gets a scholarship or y'all did a really good job and saved more than enough that would be sufficient to pay for college, anything that's remaining in that account post them going to school could then be converted to a Roth IRA in their name, so that it would set them up for retirement and go ahead and have tax-free income. Or an account that would be tax-free for them long-term and set them a great foundation for retirement. So that's a new thing there. If you want a little bit more flexibility for those savings accounts and not specifically for college, then there's UTMAs or UGMA accounts, just custodial accounts that can be for the benefit of the in the child's name, where they take over ownership, whether it be 18 or 21, kind of depending on your state. Those can kind of vary of when they would be eligible to take over that account for them, and so those are that could be new car, their first car, or you want it to be for a good down payment for their first home, wedding if you have girls. Maybe those are the types of those types of accounts have a lot more flexibility of what you take the money out for and spend it on, and don't have any necessarily tax consequences for not using it for college. The things that I would say, the financial habits that really grow and help your family, just kind of build success, would just be to automate those savings. Like we're going to put $50 a month into that 529 or that investment account for the kiddo, and then just try to increase that over time. We look at that and in the next year and next couple of years and go, okay, our income has increased X percentage. We're going to start giving maybe $100 a month towards that account, and just kind of slowly increase that savings over time. It doesn't have to be this big lump sum that you throw at these accounts. It really can be something you just start small and gradually increase over time, but setting that habit and building that habit of intentionally saving is super important, and is a great way to kind of build that financial muscle for success for your kiddos, and talking through that, talking with them about those things. Consider working with a financial advisor if you don't have one, so that they can ask you the important questions and the questions that you may not even be thinking about that are good, that will prompt kind of the conversation with you and your spouse to know what's important for both of you and what y'all value, whether it's more of that 529 plan or maybe it's just the miscellaneous account that would have more flexibility. Having those conversations and helping clarify what y'all's goals are. But the biggest thing I would say is parenthood is full of surprises. You could have a job loss, a job move, a kid that y'all weren't, you were not expecting to have one back to back, and you had two within a 3-year period, and you were like, well, that was not the plan, but it happened. And so these are just things that do happen from time to time, and definitely have had it happen with friends and family that that I know and have helped plan, for them and kind of when those things happen, how do we address it? So, but really the biggest thing is building financial security is one of the greatest gifts you can give your kids. And so just being a good steward of what God has entrusted with you. And that doesn't mean just your money, but your kids, your time, your resources. And this time of year, we've had some podcasts on gratefulness and giving and great gratitude. And so, we are really a firm that values family and are family focused. And so when you become a client, you become the Hill Financial Group family. And so if these are conversations or things that, you've got kids, grandkids that don't have a good financial advisor, send them our way. We'd love to have a conversation with them, see how we can help set their family up for success and would enjoy those conversations. So thank y'all so much for listening. This is Money Matters with Hill Financial Group, and we'll see you next time.